Case 33-4, Inter-Tel Technologies v. Linn Station Properties, Supreme Court of Kentucky, 2012. Onto the facts of this case, the plaintiff is Linn Station Properties, LLC, and there are three companies involved in this case that are getting sued, and they are Telecom Services Corporation, Inter-Tel Technologies Incorporation, and Inter-Tel Incorporation, in which we'll refer to them as ITS, Technology, and Inter-Tel from now on. About the defendants, two companies were acquired and became wholly owned subsidiary of the other, where ITS became the subsidiary of Technologies and Technologies became the subsidiary of Inter-Tel. However, ITS was not permitted to hold any funds, maintain a bank account, or pay any bills. ITS would sell products including Inter-Tel's telecommunications from an office building that was leased from Linn Properties. Inter-Tel would pay ITS rent for the Linn property office building from the time Technologies acquired ITS until ITS abandoned the premises in 2002. On June 19, 2002, Linn Station filed a suit against ITS seeking damages for failure to repair, maintain the premises, and for unpaid rent. On August 12, 2002, there was a default judgment issued against ITS for approximately $300,000 plus interest. On June 20th, 2003, after multiple and unsuccessful attempts to satisfy the judgment against ITS, Linn Station sued ITS, Technologies, and Inter-Tel to pierce the corporate veil and establish Inter-Tel and Technologies' liability for the judgment against ITS. The Court of Appeal found that it was necessary to pierce the corporate veil because ITS was operated by Technologies and Inter-Tel to achieve tax benefits and to avoid various liabilities. However, Technologies and Inter-Tel appealed this claim. The Seventh Circuit Court of Appeals used the two-part alter ego test to determine whether the veil-piercing claim is valid. So the issue of this case is whether the Court of Appeals err in piercing ITS veil to hold Inter-Tel and Technologies responsible for ITS debts. To answer this question, we'll look at the concept of piercing the corporate's veil and the two-part alter ego test used to determine whether the veil-piercing claim is successful. Piercing the corporate's veil is an equitable doctrine invoked by the courts to allow a creditor to recourse against the shareholders of a corporation. In short, the limited liability that protects the owners is disregarded. In this case, it is piercing ITS veil and allow Linn Station to hold ITS parent company, which are Inter-Tel and Technologies, responsible for the debts that ITS has incurred. The two-part alter ego test requires two elements. First, domination is where a parent entity exercises dominion over the subsidiary corporation to the point that it has no real separate existence. The second element is whether the continued recognition of the subsidiary corporation as a separate entity will sanction a fraud or promote injustice. An analysis of this case shows that both elements of domination and injustice are satisfied, where ITS lost characteristics of a separate corporate existence because from 1999 to 2002, there were no board of directors or shareholders meetings, and ITS and Technologies shared an identical set of board of directors. The president and CEO of Inter-Tel served on the board of ITS, and although Inter-Tel business conducted in Kentucky since 2001 was performed by ITS in its own name, Inter-Tel and Technologies filed sales and use tax returns with Kentucky from 2001 to 2003. In addition, ITS has been deprived of all income and assets by the acts of its parent companies, where ITS was not permitted to hold any funds, maintain a bank account, or pay any bills. Furthermore, ITS expenses and salaries were also paid by Inter-Tel. The element of injustice was satisfied as the continued recognition of ITS as a subsidiary corporation, as a separate entity, would lead to the creditor's inability to collect debt from ITS. In addition, Technologies and Inter-Tel also used the lease premises and any other assets previously held by ITS solely for the benefit of Inter-Tel and not for ITS benefit. This leads to the conclusion that the Court of Appeals did not err in piercing ITS-BL to hold Inter-Tel Technologies responsible for ITS debts, because Inter-Tel Technologies has exercised dominion over ITS to the point that it has no real separate existence, and the continued recognition of ITS as a separate entity would promote injustice. Thank you so much.